Hey, everybody. Hey, welcome back to Building Wealth Together, back to the basics. I mean, it feels like it's been forever, like we've been on a sabbatical and on vacation, but we are
Hiatus.
yeah, hiatus. But we are here and we're so glad to be back with you. I tell you, it's been a journey this 2021, navigating all of the new norms. But anyway, I'm Rosby. As Rosby, I am your host of Building Wealth Together. And we got my buds here. We got the lone lioness and we got the principal. And we're going to allow them to introduce themselves. But I'm the principal broker, CEO of Arbrook Realty, and we are a full service real estate company here to serve all of your real estate needs. And we're helping people birth their dreams and build legacies in real estate. And also the director of Arbrook Cares, our nonprofit. And we are just linking arms and shoulders and hearts with people, organizations in the community that want to bridge the gap in home ownership and educate. So I am going to punt it to my right. On my screen, we have the principal, Chris Ziegler.
Hey, it's good to be back again with you guys. I'm Chris Ziegler with the Ziegler Agency Allstate, located in Frisco, Texas, serving the whole DFW Metroplex. And once again, the whole state of Texas. I'm located in Frisco. And as you guys know, my motto is customer service with a personal touch. And I believe in education and consultation. So I'm looking forward to the discussion today and be back on board with my ladies here. And with that being said, before I kick it over to Rhonda, I just want to let everybody know, Melly Mel, our other cohort's going to be off for a little bit, doing some other things for a little while, and she'll probably be back with us maybe hopefully later on this year. But until that time, we're going to still hold it down and support her in all her endeavors and what she's doing. So, hey, with that being said, I'm going to give it to the lone lioness and let her do her thing.
Hi, everybody. So good to be back. So good to see you guys' faces and for all our our tuning Facebook and YouTube viewers. It's awesome to be back. But I am Rhonda Hutchison. I am a residential mortgage lender with Paramount Residential Mortgage Group, and I'm known as the Lone Lioness. And I roar with power and passion, and very passionate about bridging the gap between renting and home ownership, and linking arms with those like-minded people that want to make a difference in our community by building generational wealth through education and through consultation, as Chris stated. So just glad to be back to be able to share our expertise on today.
That's awesome. Now I'm gonna have to mess with you, Rhonda. Did you steal Chris's tagline?
I did.
I've seen him laugh. And I caught that too, Chris. Hey, but see,
that's flattering. That's flattering.
Yeah, that's flattering, right? If it didn't mean anything, wasn't important, it wouldn't even come to my mind. So, thank you for letting me use that, Chris.
Go ahead.
I kind of pay you.
I might turn to the insurance line now.
See, at the end of the day, we do help bring people together. And at the end of the day, it is a transactional sale, but we don't sell people, right? Nobody wants to be sold to. So I like that word consultation. That's like, will you guide me? Help me make an informed decision. So yeah, Chris, so kudos to you for changing your tagline and letting us use it.
Yeah, let's let us borrow for a minute.
Yes. But, the buzz for today, as we are coming to the close of our calendar year, Congress has, passed through the House this bill, or we'll just say an agenda called the Build Back Better agenda. Mm-hmm. Build Back Better. Say that fast 10 times.
Build Back Better.
Build Back Better. The Build Back Better agenda, which includes what we are all here for and interested in and always wanting to educate you on, is about, home ownership, improving your lifestyle, building wealth in every capacity. So we understand that it's passed the House, but now it has to get through the Senate, which we understand by Christmas they do plan on signing off on the bill. I think that deserves a hand clap because it's hard to get anything, through Congress. But back to the subject matter at hand.
Can we pray?
Trans,
Can we pray in first? Chris is gonna pray us in.
please let us do that. See, y'all, we rusty, but we getting there. Come on.
Let's pray. Heavenly Father, we first and foremost thank you for letting us be in your presence once again to be able to do the show. And we thank you for all the blessings that you bestowed upon us through your son, Jesus Christ. And the fact that we've been able to be a blessing to others, Father, and we want to continue that trend through your son, Jesus Christ. We ask you, dear God, to order our steps on a day-to-day basis and help us to make wise decisions in everything we do and to be steward of all the resources you give us. People always think of resources and stewardship as far as money, but it can be your time, your talent, and this helps us to do things we need to do. Once again, Father, to uplift you and glorify your kingdom here on earth and help, Father, to watch over us because you got this Omicron variant that's going on right now, dear God, and let people know we're not out of the woods yet and make us to be vigilant and understand that we still need to be safe and conscientious,
Yes.
and not just ourselves, but others as well in everything we do. These are blessed. We ask in your son's name we pray. Amen.
Amen. Pastor Deacon?
Still calling you Pastor.
Pastor. Take that T out.
But yes, anyway, so back to our topic today, transforming housing in real estate, transformation of housing in real estate. And that's intertwined together. But like we said the last show, we are just living in a new norm and we have to pivot and adapt, pivot and adjust. And us as professional and advocate for helping people birth dreams, build legacies, and get into home ownership and serve them, we have to be able to, help them align with what's true for them, but yet educate so that they can make an informed decision. And that's what I love about our team and our group is that we're always trying to dig in. We're always trying to, bring people on board that have the facts that can help people. And the truth is, in our country right now, there is a deficit of about 3.8 million units in housing. So, it's like preaching to the choir. We know that is an issue. Inventory is down. And in our local area, in the DFW Metroplex area, we've even seen a 50% decrease year over year in inventory. So what happens? Yes, the prices are continuing to go up. Chris, like you were saying, some of the people that you are serving, they're coming from other regions, they're cash heavy, and they are able to accelerate and offer a lot more for properties without having to be concerned about an appraised value, thus kind of booting the people who already live here, out of the game, so to speak. You want to talk about that a little bit, Chris?
Yeah, I do want to kind of discuss that a little bit because like we were talking about earlier, what you're seeing happen, we had this discussion previously about people saying, well, where are these people coming from? Where are these jobs coming from? Are the people here? I want to say I've been in Texas for 31 years, so I guess I'm kind of becoming native. But, people who've been here for 15, 20 years, like I said, these are natives from the standpoint of what we're talking about. Because what's happening, people say, well, is the bottom going to drop out because of this home market? And I don't think it's going to really totally ever drop out. It's going to be a while before that happens, just based on what you said, because me being in the insurance industry, I'm still writing a lot of policies. Some people here locally, of course, but I'm getting people always think about California, but I'm getting people coming from the Midwest, like Milwaukee, the Wisconsin area. I'm getting people from Illinois and Michigan moving here.
Wow.
In just different parts of the country. So it's not just isolated to the California market of people come here. It's people coming all over. And one of the reasons being, this is a phenomenal area to be in, as we know, because we're not pitching hell to just one particular industry. Some parts of the country, it might be tech. One part of the country might be oil. It might be something else. And here, it might be, the plants or automotive type stuff. But being here in the DFW Metroplex, we have a plethora of all these different things, from financial to tech to plants. Like I say, you got GM plants and different plants here locally as well. So one thing that happens when the situation gets turned upside down in other parts of the country, here it's still a lot of growth. Prime example, even like with businesses, like restaurants. A few years ago, I think it might have just been last year, where Starbucks was talking about closing stores around the country. But here, you see, we constantly seeing Starbucks coming up, Krispy
Yeah.
Kreme, all these restaurants are still popping up. And then, two, we're seeing the influx of corporations moving here as well, from that standpoint, too, because, economically it's viable for them. And of course, you talk about bonds and things like that from these different townships or cities that they provide for these companies to be here. But that's one of the reasons a lot of people are coming here, because we do have such an awesome opportunity to do different things. I've actually had people who move here, don't even have a job, but they're cash heavy. They're actually buying a house, and they have time to kind of shop around to see what they want to do. And some of them actually become entrepreneurs and started doing their own thing. So once again, I think that's one of the reasons we're running into here. The people who've actually been in this market for 15 to 20 years, it's kind of hurting us for these cash heavy people to come in, but it's not hurting the market for the housing, because you do have people, like you said, who cash heavy can come in and take over.
Right. Well, Rhonda, you and I were discussing a little bit this morning about, of course, inflation and the rising prices. So the healthy assumption would be, hey, if prices are rising, then wages must be rising to, compensate for that difference. And you said that that's just not happening. You're not seeing people getting exponential raises or, wages about the same.
Yeah, wages are pretty much about the same. I don't see a really big increase in the overall income of ours versus 2020 or 2019. It's pretty stable. It's about the same. So I don't see a big increase in the overall income, which becomes a problem. It does become an issue,
Right.
especially when you're stuck in a particular price
Right.
range because the
Mhm.
income
Mhm.
has not increased.
Ron, I have a question for you. Are you able to say or give a percentage wise? Are you seeing more people go from W-2 to self-employment? Or are you seeing a lot of people with longevity on their jobs, just from a perspective of the loan apps that come up in your company's hands? What are you seeing? Are you able to pinpoint a trend?
Well, I think it's really has been just really constant. It's been a mixture. W two still a lot of W two employees, and even
Hmm.
with Chris talking about the fluctuation of people moving here from different areas, that's the awesome thing about being in the DFW area is that you can actually make that transition and still stay in the same area, in the same arena of employment. If it's from in the medical field or if it's the technology field, which is very important when you're changing jobs, is making sure you stay in that field. And most coming to this area, you won't have that problem because it's just a whole bunch of
Right.
jobs out there that you can transition and being in the same field and really don't have to start over and within a different industry, which would of course interfere with you qualifying to purchase a home. It could not 100% will, but it could.
Hmm.
It could
Right,
be a negative impact. So,
right.
but I would say W two. It's just really hasn't changed.
Mhm.
And maybe because in 1099, when you change from a W two to 1099, and if you have that change, you have to be employed within that 1099, unless you just have a longevity of, just say for instance, you've been in sales for 30 years and you make that transition from a W two to a 1099. That's an exception that has to be made for you to continue. But now I haven't seen it now because if it just started, then you don't have that 2 years of 1099 when you transition from one to the other for me to
Mhm.
be able to deal with that. But maybe down the line in a year or two, I may see more of that because
Yeah,
people are deciding to go into a self-employment kind
Ron,
of.
I did have a quick question for you though. So, what about when people come in? I guess they say cash can be king in this situation. So, with these people who do come in, how, I don't know if it's the right word, underwriting, or when you're evaluating them and they come in, they're not working, but they have that money. Is it going through because they have enough cash to offset the fact, like the people I see, some of these people I have come here don't have a job, and they're
Yeah,
still getting houses.
that's the thing about it. You can have all the cash in the world, but if you don't have employment, you're not going to be able to move. You
Gotcha.
have to
Okay.
have employment to be able to
Right.
purchase a
Yeah.
residential.
And
Yeah,
I've
unless you
got
just have 100% cash, then that's a
cash,
different. Then I
right.
won't see you.
Exactly.
Then
Okay.
I won't see you. Yeah.
Well, you can either dispel the myth or fallacy or tell the truth about this question that I'm going to ask you, Rhonda. So we've had some people, they're like, oh, they want to cut you off in midstream when you're trying to educate them on the home buying. I got money. I got money. We're going to be putting 40% down. We're going to be putting 50% down. And it's like, well, what's your score? Well, it's probably a 480. It's a 500. So does money trump the credit score and what they
Money doesn't trump the credit score, but it can make a positive impact if you have that minimum credit score. But you have to have that minimum credit score regardless. There are some brokers out there which can shop around for those what we call non-QM loans, where you may have a 500 credit score, but they may require 10, 20, 30% down. But of course, you're going to pay an extra, oh my gosh, a high interest rate, which that's not
Mhm.
a loan that I will, push, but they are out there.
They're out
But you
there.
want to, yeah, you want to have that
Mhm.
minimum credit score of 580. Even a minimum credit score of 580, anything that's minimum is going to require a little bit more. You may have that
Right.
580, but you may have to bring 6 months of reserve to the closing table. You may
Right.
not have to have that cash at hand, but you have to provide uh, confirmation and clarification that you do have those funds available somewhere. It can be a 401k, it can be a trust, it can be something that you can, liquid assets that you can get your hands on. So that is
Gotcha.
not true. You have to have a minimum credit score.
Yes. Well, let's talk about thank you for that. That's very educational. Let's talk about the shortage of the units and houses in our industry, and some solutions as it pertains to this Build Back Better agenda. And I'll just speak very frankly on it in my
Okay.
professional opinion. As I was reading through the components about where the money is going to be allocated. Okay, you got 65 billion, which is going toward the rebuilding and repairing of public housing, right? And then
Mm-hmm.
you have another 15 billion going into the housing trust fund, which supposedly is going to take care of some zoning issues and building affordable houses, but still for the lower income families. And then you have 25 billion that's going toward the HUD federal vouchers that is going to help offset, and lower the rent for
Rent.
those who are in the lower income areas. So when I looked at those things, based on the people who are normally calling and the phone is ringing off the hook to serve, it is not those people. And we don't want to put people, so to speak, in a pegboard or put them in a
Mm-hmm.
Mhm.
but the real issue is this spending bill doesn't touch solving the issues of affordable housing units for people who are gainfully employed can afford. I want to hear from you guys about that. What you think about that? And do you think it is the government's responsibility to help rectify this issue?
Yeah.
Well, okay,
I
Rhonda.
guess I can start. Yeah. I don't want to say the government responsibility, but in essence, it is. Yeah. I'll say that. I'll make that bold statement of feeling that it is the responsibility, or it should be a concern, and let me provide the tools to help you get through that hump for affordable housing, which we already know it's kind of like, I want to say non-existent in this market right now. We really can say that it's non-existent. And
Yeah.
I know that we had talked a little earlier about the middle class income, and we're talking between 75 to 85,000 dollars a year. And that's the stuck part. That's the place where we're all stuck. Those borrowers that are in that, which cannot afford the $400,000 home, and stuck between 275 to three. Let's just say 400, where they're stuck, and they're not
Right.
able to move forward with those securing contracts. for those housing. So by putting this BBB, as you call it, into
Mhm.
place, I know we talked about it being for the lower income bracket, but we can go back to that point a little later. How I feel that it can help to solve a little bit of those problems. But I do agree that for the middle class, it is we're still stuck. We're still stuck. Uh,
Wow.
yeah. What you think,
Exactly
Chris?
what Rhonda said too. It's kind of like you're in the middle. That's what they call it, the middle class. So I guess for a
Yeah.
reason, the lower income people are kind of getting some benefits. The higher echelon people are getting some benefits. And one thing we talked about earlier too, because they've even kind of stretched, kind of reduced what they call the middle class to a certain extent. Don't quote me if I'm telling you the right number, but I'm not mistaken. They said if you make $400,000 or more as combined, then that's not considered middle class anymore, and that's what's hurting people as well. So if you're going to put those people in that particular paradigm, you might need to have some situations to where, from a financial standpoint, you have some, I don't know if it's interest rates or whatever you might have to do in order to help those people out. Because we
Yeah.
know we're all part of the National Association for Real Estate Brokers. And one of the meetings we had at the board meeting, which we're all in together, we were talking about that, where some of these cities have these programs in place to help. But the program that, like, it was at Frisco and Plano, I think it was like 250. But where are you gonna get a house for 250 in Plano? You know, I think in Frisco they said, if I'm not mistaken, I think they said it was 350 or 300 or 350. An average house in Frisco and Collin County
Right.
and Parker's probably about 450 to 5. So
Right.
they have supposedly, I'm doing my air quotes, supposedly got things in place for people for the housing for that limit or that price range, but it's nothing actually out there that substantiate what they're trying to do. So to have a program in place that's not actually feasible and plausible is kind of a moot point from that standpoint.
Right.
So
Agree.
that's what we
Agree.
need to make sure that we have a situation where if you're going to have that, where it's going to dictate and be where it can be able to be utilized for those people that you're truly trying to help.
Right.
Right.
Absolutely.
And I feel for those type of programs when those policy procedures, those regulations are written at such a lower level like that at the city, at the county level. That's where we as professionals, we need a seat at the table because
Mm-hmm.
we're out here serving the client. And when they put in regulations and requirements that really, even Rhonda, are so much more stringent than what a lender would require, you are really squeezing out a lot of people who would normally qualify for a loan.
Mm-hmm.
So I agree with you, Chris, to have down payment and closing cost assistance in place, but yet have such stringent parameters whereby those parameters even exceed what the lender requires. That's kind of ridiculous.
Yeah.
Yeah.
And I want to piggyback up that. I know we talk about the areas as in Frisco and Plano, those areas where the income is just a little higher. But let's talk about some of the city programs that we have, like for example, the city of Irving, city of
Mhm.
Arlington, city of Dallas. Some of those programs, which we call city down payment assistance programs, their requirements are just as tight as
Oh
as
yeah.
Mhm.
the uh, as the Frisco and the Plano. Just for example, with a city program, you can't have more than $10,000 in your bank account. Nowhere, bank
Wow.
account savings, 401k. You cannot do that. Also, the income of a student is also included in the qualifying income. So if you have a student that's going to school and they have more than just a part-time student status, they're working more than that, then their income is counted, as well as a debt to income. Their debt to income ratio is 43% on the back end. That's lower than a conventional financing. So let's
Wow.
think about that. How
Yeah.
many of us have a debt to income below 43%? So that eliminates a lot of bars that actually need that
Mm-hmm.
help but can't qualify, even with our city programs that are supposed to be for the lower income bracket. So it's a,
Yeah.
it's a citywide problem.
Yes. Yes. And like I said, I believe we can help change those things if we are in the know and are present and at the table when they are making decisions like that. But yes, back to this BBB program or agenda that the government is putting in place. One of the questions that I had in our discussion was, why do we feel that they concentrated their efforts and even upped the number of billions in repair and rebuilding public housing, which is government housing? Um, and everybody deserves, let me tell you, everybody deserves decent housing. That is our right, and I agree with that. But if we again have 3.8 million units that do not exist, especially for Texas, which
Right.
is the leader in job creation, we're really suffering here. But Rhonda, I want you to go ahead and discuss, what we were talking about, why you felt that they targeted the lower income areas, and do you really feel that that was money well spent, considering everything, our epidemic here, the shortage of housing, the infrastructure that's broke down, the roads, the bridges, and all that we need it all. But how do you feel that that allocation could have happened better, or did it happen according to what they had to work with?
As discussed earlier, in my opinion, I think the allocation was fair. I think it was a positive allocation because as a lender, we deal with this on a constant basis, and I know you as a realtor does as well. But it's not having those houses or those new build houses where we have the land banks, or those homes that have the programs to revitalize those areas are placed into those areas or those arenas. We'll just say for South Dallas, that may be just a little less.
Right.
And I don't want to say desirable because that's not the word that I'm looking for. That may maybe have an impact for
Mhm.
a middle class that's trying to move into another area where there is an affordable house and a new house that may have been placed in that area, and they're not wanting to go into those areas. And I think by revitalizing the areas that are, and I don't want to say less desirable. I'm not trying. I'm not going to try and put lipstick on a pig. Okay, I'm just gonna talk about how I feel. Is that it attracts you to be able to say, okay, I'm moving into this area. The area is rebuilt, is revitalized, it's upcoming. Everyone's taking pride in the community. It's a whole different outlook than it may have been 5 years ago, 10 years, or yesterday. So
Mhm.
building up those areas also does bring the more desirable, the maybe middle class, or a little bit what we not consider to label low income bars into those neighborhoods, which is going to do nothing but what? Build the neighborhoods to be more desirable for everyone to live in. And also, let's just think about this. When you have a neighborhood that you revitalize and you put money into, what do? You bring pride to the community, right?
Mhm.
You bring pride. Now people are keeping up their yards. They're not having rundown cars on bricks in their front yard. And what it does is bringing pride because when you have pride, you just treat the
Right.
things better.
Hmm.
And
I
so I
agree.
think it's a positive move.
But it
Yeah.
boils down
Since
to, I'm sorry, go
Go
ahead.
ahead. No, and I'll say our children tend to do better in
Yeah,
school.
they
Yeah.
do.
When they have
Yeah,
a thriving community that they are surrounded by. Hmm.
correct.
And so I was going to say, what it boils down to is the economics. That's what it boils down to, because I give you a case in point. Uh, Back in 2000, we were in Arlington for 8 years before we moved to McKinney. And one of the driving forces that made me decide to move was because the way they were, doing the medians, the upkeep of the area, like the common fences, in the Arlington area, the medians where the grass was growing, they weren't cutting the grass. And like I said, boiled down to me from economics. I told my wife Connie, I said, hey, we got to make a decision. this is going to probably impact our home value, the way they're doing things, and people moving in, like you said, not taking care of the property like they were before. And then to make a long story short, we got out at the right time because we had some other friends that were in the process of trying to get, build and do some other things. They had contingent contracts that they had on homes, but then they weren't able to sell their home. They ended up having to stay another 2 years. We got out maybe 3 or 4 months before the bottom dropped out because of how the dynamics of that area changed. And they were there. Some of my friends were over there for another couple of years before they could kind of get it back going again. So, I don't care you white, black, pink, blue, or green. Like I said, it boils down to economics, and that's what made me decide, hey, let's use an old school term. I said it's time for us to bounce and go somewhere else because it was going to impact us financially, from that standpoint. But ironically, that same area that we moved from had time to change. We built that house back in '92. And I just recently looked on Zillow to see how much the house was. We bought it for $69,900 back in '92. That house is going for like about $215,000 to $220,000 now. Wow. So this house in 2020, I got it for less than $70,000 in '92. That house is over $200,000 almost, here in 2021.
Yep.
So I knew, hey, I would have held on to that. Somebody like, you should have held on to it. I said, well, we didn't know the market was going to be like it is now.
And that reaffirms the point that I was making. What did they do? They put back in the community.
Exactly.
That's what they did. So it goes to the point that I'm making. So I do see it being a positive.
Mm-hmm.
Yeah, a lot of people are still asking, when is the influx of the foreclosures coming? When are the influx of the short sales coming? And for those of you who don't know what a short sale is, basically you have to prove to your lender that your financial intake doesn't suffice to pay your mortgage anymore, and you may be upside down, meaning owe more on your mortgage than the home is worth. So the uptick of short sales for 2021 going into 2022, the likelihood is this much. Only because why? The accelerated market value increases. I mean, the average market value has increased about 16%. And in some areas, especially here in the DFW area, guys, it's been 20 to 25% increase in market value. I mean, that I have not in my 26 years seen anything like this. So if you're going to your lender saying, I don't make enough to pay for my mortgage, they're looking at, well, you got the equity. So, they're not doing short sales so much anymore.
Right. That's true.
Yeah.
And what's unique about what you just said too is the fact too, we got to be careful. But one thing people have to look out for, once again, people who come from other areas. I have customers who are not even living here in the Metroplex who are buying properties here, for investment properties. They're in other states, and they're because the market is so ripe, they're cash heavy. They're actually buying properties here, and we do what we call it like a landlord policy. And essentially, what a landlord policy is you buy the house, you just have this people as tenants in those houses. So I'm seeing that as well.
Yeah.
Also, yeah.
Yeah. I saw a house in a neighborhood go for about 12% over the list price. That's huge. 12% over the list price. The buyer, because I talked to the agent, the buyer bought it sight unseen from California, and it was cash.
Mm-hmm.
About 3 weeks later, there was a for rent sign
Exactly.
in the yard. So that's telling me that investors may not be getting those, 50 cents on the dollar, 60 cents on the dollar, maximum 70 cents on the dollar ROI on those properties, how they used to buy them. Do you guys been seeing?
Well, say it again. You did a mannequin challenge for a minute. You froze for a minute.
Oh my goodness! Technology, do not fail me now. I was asking, what have you seen in terms of investors, because they're no longer getting the 50 cents on the dollar, 50 to 70 cents on the dollar that they were getting, 15 years ago.
But well, going back to what I just said, they're coming in, they still making, they're still, like I say, making some real grip still because what they're doing, the rent they're charging is astronomical. Case in point, I was talking to somebody recently where they said they were out of their home and they said they were renting the house. I think they said for like, I thought, well, they were renting the house for $6,000. I said, oh, I said, that's not bad. Why you out of your house for 6 months? They said, no, that's $6,000 a month. I thought they were talking about like $1,000 a month. So they're making astronomical amounts of money on these on renting and leasing these homes. And I said $6,000 a month. That's not uncommon. You know, somebody told me they were paying $4,000. I said you got a deal then. So something might normally have been like you talking about the house. The house I think for $6,000. I think it was like a 2,100 square foot house that they were renting for $6,000 a month. So they're making up that money. Although they spent it like you said maybe 12% over. If I heard you correctly.
Yes.
But they get that money back quick, fast, in a hurry because the money they're charging for the rent or the lease is astronomical. So they're making that money back. So, I mean, it's still a huge benefit for them to do that.
So
absolutely.
y'all going to get me on my soapbox here because
Get up there.
the question that you asked, why would I want to pay more? Why would I want to pay more than a home is worth in today's market? And y'all know I have been preaching and I have been teaching and I have been consulting that we need to what? Fire the landlord and stop making them rich. And I for the life of me, let's say 20,000 overpriced today. That's a little bit of change. The way some of these people are outbidding and overbidding on the homes, but let's just say even if it was 30,000, even if it was 30,000 more, how long will it take for you to suck up 30,000 when you are renting and not have one red cent to show for it, not any tax deductions, no write-off? So I don't understand why somebody would go pay $4,000 or $6,000, Chris, to rent.
This is what's happening too.
Why would they do that?
In some situations, they don't have a choice. And I'm going to tell you why. People always say you always have a choice, but some people have made, I don't say bad decisions, but prime example, you said all these homes have a lot of equity in them right now. And this one thing I'll say, I'm not a mortgage person. I'm not an insurance. I am an insurance person. I'm not a realtor, but I've been around you guys long enough. I talk to my customers. I say, hey, you might want to think twice before selling your house because if you're selling your house, I got $300,000 worth of equity in it. Yeah, but then I always ask people, where are you going to go? And sometimes the little equity, I can say little equity, the big equity you thought you had is not as much as you think it is because when you try to go to the next house, if you have $300,000 worth of equity, you might have to use 200 or 250 of it to get your next house. In some situations, in some scenarios, the house you're getting might not even be better than what you already had.
But Chris, I know everybody's reason, and Rhonda, everybody's reason may be different. Who says the house had to be better? How come it cannot be a smart move to take a big chunk
that's true.
of profit that you would not normally get anywhere, right? That quick, right? But other than the sale of your home. But it just does not make sense.
I got to, y'all. I'm sorry.
Yeah.
As a lender, I got to put my 2 cents in now.
Put your nickel and quarter on it.
This is what gets me excited when I have a bar that calls me and say, you know what, my landlord just went up, not $100, not $200, have gone up $500. And I refuse to pay that. And I am ready to purchase whatever it takes. Now, and that's what's happening. That's why they can pay over asking in these cash offers $20,000, $30,000, $40,000, $50,000, $60,000 because they're making it up in a couple of years. And everything else it's gravy because guess what? Rent is going to still continue. It's $500 today,
Here's
but
the
it's
thing.
$600 next
Right.
year and $700
Yes,
the following.
landlords know,
They
not unless you,
know.
not unless you're going to be under a bridge or in a shelter, they know you're going to pay the rent.
Yes.
They
Hmm.
know that
Hmm.
you're going to pay the rent. I feel we are in the best position to educate people to
Right.
stop the bleeding. I have people who have contacted me every other year for the past 6 to 7 years. I'm ready now. I'm ready now. And they're still reading. I'm ready now. Now I'm really ready now, right? Now they really
I'm
ready.
ready for
For the
real.
reason, yeah, for the reasons that you have said, Rhonda. And you know, all these years, they've lived very lavish and they didn't curb their appetite on any of their spending, but now they're really, really, really ready. So I think the best thing that we can do is educate people on being good stewards over, the finances of what God has given them. Um, I'm of the opinion that you should break the back of the creditor, get them creditors off your back, get them off, your caller
Credit report.
ID.
Uh-huh.
Yeah, get
Yep.
them off your credit report, right? So, yeah, this is crazy. So back to our solutions for affordable housing. We said that the BBB, and that was Build Back Better agenda that Congress has set forth with all of these billions and billions of dollars that's going toward public housing, rebuilding public housing. One component of this is a $1.2 trillion infrastructure plan that they are hoping is going to be passed by the end of this year. That includes roads and
Hmm.
bridges, public transportation, airports, safety. They even want to do smart and electric ferries and
Right.
buses, the smart grids for energy. So I guess as we are building, that is just as important to keep up with the growth. We got to
Hmm.
have, substantial and good infrastructure. So back to jobs, and I'm always trying to mastermind on, how can we make the best of the situation that we are in for those people who are W-2 employed or underemployed or have been waiting for a promotion in a position. We've always been taught follow the money, right?
Hmm. All
So
right.
if all these trillions are going to be going into infrastructure, roads, bridges, public transportation, even internet, what kind of jobs you think people should be going for, y'all?
Exactly.
You
I mean,
know?
All the above.
all the above. I mean,
all,
that's a
all
good
the above.
situation to be in. Have all those different jobs, but if people take advantage of it, and that's another thing that's a concern too, as well. It's so many restaurants. I don't care what kind of business you're in, restaurant, even I hear sometimes situations where it's people who would be a six-figure type job, a corporate type job. People just are not working. Jobs out there, there's people not taking them. And my concern is, what are we going to do to get those people in these positions in order to kind of keep the economy going from that standpoint as well. And this kind of makes me wonder too, like, man, somebody must be living good because if people are not taking these jobs and they're out there, I mean, what are they doing? That's been my
Yeah.
biggest wonder.
Hey,
Yeah.
we had a comment from Miss Sharice Hall. I hope she don't mind me calling her out. I think she was commenting. She can correct me if I'm not right. She was commenting when we were talking about paying the higher rent versus buying, and she's like, "Nope, still not worth it." Just saying, good advice. So yeah, Sharice,
Yeah.
I think you are a proponent of home ownership. Is that correct? And if that's the case, I mean, that's your right. I don't believe that everybody is suitable for home ownership, even though it's our right. Why?
Hmm.
I mean, if you're just relocating and you're only going to be in an area 2 months and you never see that area again, and if you don't want to invest in an investment property, then no, home ownership is maybe not right for you. But I go back to one of the most important things. if your mind ain't right, if you don't have good discipline, if you won't stick to a budget, then you do not need a house. I mean, right, Rhonda? I mean, I'm sure you've seen.
Yeah, unless you just want to lose it, and that's why you get prepared. That's why it's called do get the foundation to be able to sustain once you're able to purchase. So you're
Right,
right. That's the worst
right,
thing is that have someone in a home and they're not able to keep it. It's
Yep,
not.
right.
exactly.
Yeah, it's not.
Yes, yes. So, um, yeah,
Right.
we
But
got.
hey, Ross. One of the things about the BBB, as you call it, the Build Better Back, which I got excited about because you think about this, education is the foundation, and we talk about education and consultation, Chris. But the better, but Biden had one of his proposals were to give back to the education when it comes to minorities.
Uh-huh.
And as part of that initiative, I'm gonna read this to you. What that initiative was is because public housing, we already well public housing and let's say public education for African Americans, blacks are unlikely to have access to high quality preschools. So what he's suggesting is to provide universal high quality preschool for
Hmm.
3 to 4 years old.
Yes,
No
I
cost.
saw that.
Yes,
I
I
Yeah.
saw
thought
that.
that was awesome. And of course, invest back in the school infrastructure so all students have a healthy learning environment. Invest in back in the schools where the buildings that are ran down are being able
Hmm.
to be revitalized, so it's safe for the children to go back into school. So I thought that was just awesome to be able to do that and provide 2 year tuition for community colleges. And if you're in a 4 year um, college, it's to be able to provide some kind of structure financial where you'll be able to sustain in the 4 year college.
Exactly.
Education is the foundation for everything. Everything that we talk about, if you don't have that foundation, the decisions that you make for home ownership, you may not get there.
That's a
So
very good point.
Hmm.
yes, for
Very
providing
good
that into
point.
our school systems, our HBCUs, our preschools, being able to have a free preschool for everybody 3 to 4. You don't have to go into these private preschools that is in the public schools. And I think that's a great move. And I'm really looking forward and hoping that this passed before the year
I'm
is
gonna
up.
piggyback on what you said too, because if
Yes.
I'm not mistaken, I think they said with the first 5 to 6 years of gonna be a major determining factor of how a
Oh,
child will go, education from that
yeah.
standpoint. And
Mhm.
sometimes that's where we get left behind is minorities. Sometimes piggyback on what you just said, it's the fact that a lot of times we don't have that strong preschool or pre-K or kindergarten um, scenario where we take it, you have to take advantage of that, and when we don't take advantage of that, what ends up happening, it kind of dictates how you go moving along. Because sometimes what they say is kids sometimes can be up to 1 or 2 grades behind, although they might
Mhm.
technically be in the third grade, they still reading on a second grade level or first grade level. So, like you said, it's important to do that. But kind of going back to housing too, you're talking about we talk about the working poor. So I am glad they're doing that for the public housing as well too, because you said that you have the working poor, which is kind of sad that we're technically supposed to be the richest country in the world, but you see situations where sometimes too, where people sometimes get eliminated from different programs because they quote make too much money. They might only be
Yes.
making $35,000 or less. Because I think what they said, what was it, working poor? I think you have to be making was it 30,000 or less?
Mhm.
I believe. Don't quote me on those numbers, but
That sounds about right.
I mean
That sounds
that's
about
what's sad too. So you talking about somebody who's making 30, that's what they call it the working poor, because you making $30,000 and you might be a single mom or single dad or something like that, trying to work, support your family, but you're missing out on educational or different programs because you making $30,000, but you're still not able to, because they say you making too much money.
right.
Or
Right.
sometimes you see people get penalized for having 2 jobs, busting their hump to, try to make ends meet, but because they have those 2 jobs to make ends meet, then they get penalized for trying to do the right thing for their family, which I think is something they do really need to address.
So I'm old school when it comes to this. And I just want to give my mother props. I'm not going to go into my testimony, but we didn't have a lot. And we were probably one of those that were in that class that we would have qualified for this free preschool. And actually, because I went to, it was called Head Start,
Right.
right?
Mhm.
You
Yeah, I
remember what
remember
Head
that.
Start?
Uh-huh.
Yeah.
Head Start gave me a head start. And, all glory to God. I mean, without, you know, much private tutoring or, many positive examples around me, I graduated with almost a 4.0 in high school and went through hell in life. So let me tell you, this education is very, very important. And I believe it does start at home. And I just think we can solve a lot of our issues by starting with that education at home. Even if you don't qualify for the programs, don't live for the programs. Don't stay on welfare for the rest of your life because you keep having the babies because you want to get the highest maximum number of deductions at tax time. Y'all would
Right.
not be surprised some of the people that I've encountered and talked to and the mindset.
Mm-hmm.
They would rather sit at home and draw the government money and all the benefits versus cutting those chains, having somebody else responsible for their destiny, you know, equal, equal. Mama soapbox may not be all that God has for us. So why not shatter every ceiling?
Mm-hmm.
Why
Mhm.
not go after every opportunity? And I'm thankful for what was in place. But, in other words, don't milk the system.
Mm-hmm.
Yeah.
In other words, don't milk the system. I mean, a lot of our issues can
I
be
want to bring a
resolved.
comment too about what you said too about education, and you've heard me say this on many occasions as well. So like I said, college is not for everybody. Community college is not for everybody. I said, education is still, if you get a trade, whether it be welding, you got some trades out there that pay extremely well,
Absolutely.
also. So if college is not your thing from that standpoint, you can be a welder or you can do, like I said, maybe construction. They make good money as well. So there's other options out there as well. But still, it takes education from that. It's a different type of education because sometimes even with welding, it's like going to college because you have to study to get your certifications and things of that nature. And like even in insurance, it can be a good living for people as well. You have to pass your test, your PNC test and health tests and things like that. But it can be a good living for people as well. So it's different ways to get an education. And then that's me have to go to college. But I'm glad you did talk about my HBCUs as well.
Yeah, and I want to just give, I mean, just some personally when Chris piggyback off of Chris of how I'll just say a single mom that is considered in a middle class income bracket, but has children at home where she's supporting totally. Just think about my daughter. She's a registered nurse. She's in the middle class, but
Yeah.
she has four daughters, and she's not able to get support or any help for the younger
Right.
ones to go to preschool. She makes too much money. So
Mm-hmm.
with the government be able to look at how they do it is when we come to down payment assistance. If you're within, you have 1 to 2 in a household, then it's it's 80 some $1,000. You have 3 to 4, then it's 100. It should be a tier assessment of when it comes to these kind of programs instead of being a blanket. You make this much money. It doesn't matter how many you have in your household
Right.
because it does matter. So
Yeah. So
all of
you
those
say
things need to be
case
addressed.
by case, circumstance by
Yes,
circumstance. I
yes,
agree. I agree with that. Well, one positive as we wrap it up about this BBB is that some of the is it 15 billion, 15 billion will be going to the housing trust fund, and in that part of that will be to build affordable housing, but for the lower income communities. And we said that that can only be beneficial for those areas to give them a boost
Mm-hmm.
so that they can rise. So this has been good, y'all. Thank you for your earnest consultation.
consultation.
And yes, and your professional and personal opinions. Cherie and those who have been watching, thank you for coming in to join us. We're building wealth together. Back to the basics. We're here to keep you educated and informed about your future and going after those things that will holistically make you a better person and put you in position to gain wealth, and not only gain it, keep it, and not only keep it, multiply it. And we're in the real estate, insurance, and mortgage industry. We have Melly Mel, who is at a phone call, would be able to help you with credit as well. But we definitely thank you. I'm Roz B. Ask Roz B., principal broker, CEO of Arbrook Realty. We are a full service real estate company here to serve all of your real estate needs, and we want to help you birth your dream and build a legacy in real estate. We want to help you fire your landlord once and for all and not have you rent to own the rest of your life, but own to rent. And our number is scrolling at the bottom of the screen. If you want to reach me personally, you can call me at 972-996-4702. That's 972-996-4702. Rhonda?
And I'm Rhonda Hutchison. I'm the Loan Lioness, and I'm a residential mortgage lender powered by Paramount Residential Mortgage Group, where I do everything residential lending from VA, FHA, all down payment assistance programs. If you have any questions, you may not be ready now, but if you're in preparation to be prepared to purchase, don't hesitate to reach out to me. I'm here to answer any questions to get you on the right track. You can reach me personally at 214-856-3747. Either text me or give me a phone call. Once again, that's 214-856-3747. Because just like Ross said, we're linking arms together to build generational wealth.
And I'm Chris Ziegler with the Ziegler Agency Allstate, once again located in Frisco, Texas, serving the whole DFW Metroplex and the whole state of Texas. And like I said, I'm a full service insurance agent. Of course, we talk about homes and auto and renters insurance all the time, but I do other things as well. I do commercial insurance and business insurance. I do life insurance, and we do financial products as well. So definitely reach out to me. I can be reached at 214-870-4269. Once again, it's 214-870-4269. And I would be remiss without thanking these ladies on the call with me and everybody who donated to the drive the Saturday before last, the weekend before Thanksgiving. We got a plethora of things that were going to Services of Hope, Community Lifeline, and Streetside Showers. So these organizations that do a phenomenal job of trying to take care of the community, and especially at Streetside Showers. I just found about them probably about a few months ago. And what they do, they go to different areas around the Metroplex and to just provide showers for people who are homeless. And they say you just be amazed on how happy those people are. And they just seem like like a new person just getting that one shower. That might be the one shower they get once a month, once a week, or whatever the time frame it is. So once again, thank everybody who participated in that. And if you weren't able to, there's always another thing coming up. In fact, in the end of January, I'm going to be doing the code drive. So put that in your crawl and chew on it a little bit so you can start doing that. And a lot of people have things in their closets that they can get rid of that they don't need. I've been trying to do a better job of that myself by not buying too much, but if I'm getting something, to make sure something else is going out. So just make sure we try to help our fellow man as well.
That's awesome. So you can reach us here on Facebook Live and YouTube every fourth. Traditionally, it's every fourth Tuesday at 12 noon. That's 12 noon Central Standard Time. We were off a little bit due to the Thanksgiving holiday. We had it on the last Tuesday of this month, but come back the last Tuesday of every month, the fourth Tuesday, of every month at 12 noon, high noon. Until next time, y'all be good. Bye-bye.
All right. Bye-bye.
Bye.
Be blessed.